Yo, what up, gang? It's episode 1. I know you guys just watched episode 00. I know that shit was boring. Just a little intro, just to show you guys what this is about. But yeah, bro, I'm fucking hype. I'm so hyped to teach you guys everything that I know so you guys can apply it as well. But yeah, let's get straight into the video. It's going to be about candles, candlesticks, show you guys how they work, what they are, and what the fuck it even means. I know you guys look at a chart and you're like, what the fuck is this candle? What does it even mean? It's just a bunch of lines and rectangles on a screen. Bro, don't worry, I got you. That's exactly what this is for. I'm gonna teach you guys everything about it. So yeah, this is candles. So the first thing I want you guys to understand is how a candle is a candle, right? Like what even is a candle? A candle is composed of two things, a body and a wick. As you can see here, the rectangle is the body, the wick is the string cheese looking type of thing. You got the wick on top and the wick on the bottom. Doesn't always mean that there's going to be a wick on either side, right? A wick is just the range that price moves in between the time of the candle being open and closed, right? So a candle, in this case, we're going to specify the candles that we're using here are a 1 minute candle. Candles can be in different time frames. Candles can hold 1 minute, 2 minute, 3 minute, 5 minute, an hour, 4 hours, a day, a week, a month, whatever you want in time, right? So a candle just specifies the movement of price during that time period. So if you're on the 1 minute time frame, you're looking at candles that are composed of data compiled in 1 minute. If you're on the 1 hour time frame, you're looking at data of a candle composed during the 1 hour, right? So for this sake, let's just talk about these candles as 1 minute candles, right? So there's two types of candles. There's bullish candles and bearish candles. I'm sure you guys have heard that, or if you don't know about them, then this is exactly what they are. Bullish candles are candles that open low and close high, also known as open low, high close. And bearish candles are ones that open high and close low, right? So in this case, we have bullish candle to the left, bearish candle to the right. And here you can see the bullish candle opened down here, closed here, and these two wicks are, one, the highest point the candle went during the 1 minute, and the lowest point the candle went during the 1 minute. Vice versa for bearish candles, right? Highest point the candle went during the 1 minute, and lowest point the candle went during the 1 minute. In bearish candles, you open high, you close low. Bullish candles open low, close high. That's what specifies if a candle is bullish or bearish, right? And what I was talking about candlestick patterns before, you don't need to pay attention to any candlestick patterns, but if you were going to look at any at all, at least look at doji candles on higher time frames, meaning like on the 1 hour, the 4 hour, the daily time frame. These doji candles are candles that indicate there's no directionality in the market, meaning there's not really a side that has control, because the market is all about control. Either buyers have control or sellers have control. Doji candles let you know that there's no control in the market, meaning it is possible for a reversal when you see a doji candle on a higher time frame. Don't put too much importance on it. It's just something to note if you guys have the opportunity to find one or see one. It's something to know, but don't put importance on it. I just want you guys to understand how candles operate, how candles work, what a bullish and bearish candle is, which is exactly what I'm showing you guys here. Bullish candle, bearish candle. Now that you guys understand what bullish and bearish candles are, I want you guys to understand market structure, right? So market structure can be bullish or bearish. Same thing, the candles can be bullish or bearish, meaning bullish, you want price to go higher. Bearish, price is going to go lower, right? So in bullish structure, it's composed of two key elements, and these are the key elements. In bullish structure, you want to see higher highs and higher lows, right? So those are the two components of bullish market structure. So as you can see here, I'll show you real quick, we have a high right here, and then we have a low. So in order to be bullish, you want to create a new high and essentially a higher low, which would be right here, right? That confirms bullish market structure. So when you have a high that overtakes the previous one, being at a higher place in the previous, and a low that is placed at a higher place in the previous low, that is a higher high and a higher low, which means bullish market structure. Now, The same thing for bearish market structure, right? So bearish market structure is composed of lower highs and lower lows, as you guys probably would have already guessed. That's what it's composed of. So in bearish market structure, you have a high up here and you have a low. Now, in order to be in bearish market structure, you want to see lower highs and lower lows. So this high, the next high that gets put in, you want it to be lower than this one. As you can see here, we have a lower high. And then here, we're going to put in a lower low. Once you see a lower low and a lower high get put in from the prior two, that is confirming bearish structure. Super simple. Do not overcomplicate this. Bullish structure is composed of two things: higher highs, higher lows. Bearish structure is composed of two things as well: lower highs and lower lows. That's as simple as it gets. Whenever you see market structure shifting from bearish to bullish or bullish to bearish, you can confirm it by these two steps. You want to see if bearish is going to bullish, you want to see that there's a higher high and a higher low. If bullish is going to bearish, you want to see a lower high and a lower low. All right, that wraps it up, boys. That was candlesticks, and I gave you guys a little bit of info about market structure. The next video will probably be about full in depth about market structure and break of structure and how to identify trends in the market. I just wanted to show you guys a little bit about it. But yeah, if you guys fuck with these videos, just make sure to subscribe to the channel. Follow the socials are down below. If you guys want to join the Discord, it's completely free. The link is down below. But yeah, drop a comment. Let me know what you guys want me to actually go over in these bootcamp videos. If you guys have anything in specific, I will be covering everything I think is necessary. But if there's anything in specific that you guys want to see, make sure to drop it in the comments. But yeah, that concludes today's videos: candlesticks and market structure. See you guys in the next one. Just click right here. It'll probably be the next video.